Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, so we're consolidating here into the highs. Last time we talked about how the bears were going to have to defend any of these key levels at all. And let's just jump right to the hourly chart because they didn't defend a single solitary one of them. We talked about how this had a very high risk of being a higher low. They then proceeded to give up the 50, the weekly pivot, the 9-day, the pre-FOMC price, the daily mid-band, and now we're just kind of chewing it up here in around that round number 4,700, underneath the 4,740 all-time high, just waiting to see what the next move is going to be. What I'll say is, unless the bears find their car keys here, and if they need some news to make it happen, I suggest some news find them. We're going to consolidate, we're going to lift, we're going to convert 4,700, and we're going to print new all-time highs because it's really all that's left to do. The bulls didn't look particularly great yesterday, but they defended everywhere they needed to defend, and they made a higher high. And they did not, give up any key area. I can't take the bears super seriously until they get back below the daily mid-band and turn that back into resistance. So I was talking yesterday in the chat room about the difference between volatility and directional price movement. So let's talk about that for a second. You can have volatility, which we had yesterday. You get these swings, they whip it down, they whip it back. Price moves 5, 10, 15 handles. We ended up having a very good trading day. That's different than directional price movement. Sometimes you get both at the same time. Tuesday, that was both at the same time. They opened this thing up, they rang the bell, and they had walked it up into the open. They took a look back, and boom, we were off to the races, went up the vast majority of the day, and that was that. It was trend up day. You go back to parts of Friday, it was a trend down day. That's directional price movement. What you had yesterday was a lot of volatility short term, but no directional price movement. We ended up pretty much, not too far away from where we started. The opening print in the regular session yesterday was 46.90. And the 4 o'clock candle closed where? I haven't even looked at this. I'm looking at this on the fly. 46.97.75. So, under 10 handles. We went up as high as 47.12, down as low as 71.75, and the whole thing just kind of migrated back, which is fine. That's what consolidation is. And if you look at this chart from where we've been to where we are now, it needs to consolidate. It needs to consolidate. I thought we would consolidate earlier in the week than we did. And the bears wish we had, because I was thinking we consolidate down here. We didn't. We consolidated up here. I appreciate it because there's a lot of handles between here and there. But this thing needs to breathe a bit. It's been a very exciting couple of weeks. Do I think this lasts the rest of the week? Probably not. Probably not. I think we start getting an indication about what this thing wants to do at some point today into tomorrow. But each side has a very tough task in front of them. It's not going to be easy for the bulls to take this up past 47.40 and change unless they get news that supports it. And even then, can they maintain it up there? I'm not sure. There's a whole lot of reasons to take profits up there. There's a whole lot of reasons to take profits here if you've been putting positions on all during the course of 2021. At the same time, to have the bears take it back to even where we were on Friday is 1,000% going to take another news shoe to drop. And it's going to have to be a news shoe that drops, that is sustainable, that gets everybody's attention very rapidly. Could that happen? Absolutely. There's all kinds of potential for that. But absent that, in a vacuum, organically, to have the bears take control of the tape again, that's a pretty low probability outcome. They're good for some trades, but it's like I always say, if you're short, sometimes you're short like we were Friday. Friday we did a 90 handle runner to the down, and we'll do whatever the market wants to do. But when the tape gets like this and it starts to push lower, take your profits on your shorts, keep your runners, and when stuff stops working, you got to switch and get into the long. Getting out of a couple of shorts this week and getting into longs, like we got long 77 yesterday. That was a big trade for us because it didn't work. Our proprietary lower level was 75, and we had done well. We had profit, we had a runner. When that area could not get converted and create what we call a bias, it was time to buy. So we took a very nice runner down there. We got long, and it ended up being a really good trade. The mistake you run into is just saying, planting your flag and saying, no, that's it, lower high, we're coming in. We're going to go down. Oh, really? Okay. I don't care if you stayed at a Holiday Inn Express or not. You have to, price rules all. Our opinions matter very little. And when those shorts stop working, you have got to have the discipline to understand that it's played out as a trade and to get involved in the direction of the tape, which at the time was long. There will be a time and a place to hold runners again and to have things go deep down. But I think what we're going to see between here and 47.40 is it's going to be that slower grind. It's going to be that grinding, smaller ranges. They're going to grind people up. So you got to be opportunistic and you got to have some perspective. All right. That's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll be back tomorrow with another webcast. All the best.